Let me ask you something. If the top 100 XLM wallets control 87% of supply and they aren't selling, what do you think they're waiting for? Because PayPal didn't launch on Stellar for fun. Visa didn't add XLM to its settlement network by accident. This video shows you exactly what the big money is actually betting on and how much time you genuinely have left. Okay, so I want to start by actually verifying the stuff in that opening, because I think a lot of videos throw around claims like PayPal launched on Stellar without ever showing you the actual receipts. And I'd rather show you the receipts first than walk through what they actually mean, because the meaning is more nuanced than just buy now. First, the rich list, number 87%, top 100 wallets. That's real. That's pulled straight from on-chain data. The top 10 wallets alone control somewhere around 50% of total supply, which works out to close to 80% of circulating supply specifically, since not all 50 billion total XLM is actually released into the market yet. The single biggest wallet of all, by itself, holds about 41% of total supply. And below those top 10, the distribution actually gets more layered than people usually realize. Roughly 37% of total supply sits in wallets ranked 11 through 100, separate from that giant single wallet at the very top, meaning there's a real broader band of large holders underneath the foundation's own position. Not just one mega wallet and then a cliff straight down to retail. Some of those wallets in that middle band are exchanges holding pooled customer deposits. Some are early backers, and increasingly, some represent the kind of institutional positioning that comes from exactly the partnerships we're about to walk through. Now, before we go any further, I gotta be straight with you about who that wallet actually is, because I think the word billionaires in this video's title needs a little honest unpacking. That 41% wallet belongs to the Stellar Development Foundation, the nonprofit that stewards the network. It's not a person. It's not a hedge fund manager sitting on a private jet deciding when to cash out. It's an organizational treasury earmarked publicly for ecosystem development, grants, and partnership funding. So when you see top wallets aren't selling, the more accurate way to say that is the foundation's treasury is being deployed according to its own stated mission, not dumped for personal profit. That's a real meaningful difference. And I think it actually makes the underlying story more interesting, not less. Because it means the concentration isn't really billionaires quietly accumulating in the shadows. It's something closer to a foundation funding the exact partnerships that are now showing up in the headlines. So, who are the actual big money players making real bets here? The ones that genuinely deserve the word billionaires, or at least billion-dollar companies, because there's a real list and it's bigger than just one or two names. Let's start with PayPal, because the claim in the hook is completely accurate. Back in September last year, PayPal's own developer account confirmed it directly. PUSD, PayPal's dollar-backed stablecoin, is live on Stellar. Not a rumor, not a leak. An official announcement with PayPal explicitly highlighting low-fee transfers, about 5-second finality, and built-in anchors for converting in and out of local fiat currencies. Mays Abney, VP for digital currencies at PayPal, said the move was designed to, quote, advance the use of blockchain in streamlining cross-border payments. Danelle Dixon, the Stellar Development Foundation CEO, framed it as a way to carry stablecoin utility into emerging markets, specifically addressing businesses and consumers who need fast, reliable settlement infrastructure that traditional banking rails in. Those regions often can't provide, and there's actually a forward-looking piece to this partnership that I think gets skipped over too quickly. PayPal's been developing something called PayFi, an in-development digital finance tool. And the plan is to use it to deliver real-time capital to businesses in PUSD on Stellar specifically, helping companies manage their operating funds and transaction settlement more efficiently than waiting on traditional banking timelines. That's not live yet. I want to be clear about that. It's in development, but it tells you the PayPal relationship isn't a one-off stablecoin listing. It's part of a broader multi-product roadmap that PayPal's building specifically on top of Stellar's rails. It wasn't an isolated move either. The same week, Ondo Finance launched USDY, a yield-bearing stablecoin backed by actual US Treasuries on Stellar too, meaning Stellar picked up two major stablecoin integrations in basically the same breath. Ian DeBode, Ondo's chief strategy officer, put it this way at the time: stablecoins unlocked global access to the US dollar, and USDY was meant to take the next step, bringing actual US treasuries on-chain in a form that combines stability, liquidity, and yield all at once. Combined with PUSD landing the same week, Stellar's total value locked from tokenized real-world assets jumped to something like $450 million around that same period, alongside total network TVL crossing $140 million, driven partly by PUSD's capacity to handle around 5,000 transactions per second. Now Visa, and this is genuinely one of the bigger validations in this entire space, even though I think the mechanics of it get a little garbled when people repeat it secondhand. Back in July last year, Visa expanded its stablecoin settlement platform, the actual infrastructure Visa uses to let partners settle payments using stablecoins instead of traditional rails, and they added Stellar to that platform, alongside Avalanche joining Ethereum and Solana, which were already supported. With that expansion, Visa's settlement platform supports 4 stablecoins: USDC, PayPal's PUSD, the global dollar USDG through a partnership with Paxos, and URC, Circle's Euro-backed token, across those 4 blockchains. Here's the part I want to be really precise about, because it's the difference between understanding this correctly and just repeating a hyped-up version of it. Visa is settling stablecoins on the Stellar network. It's not that Visa is buying or settling XLM itself as the asset changing hands. XLM's role in that system is more like the road the stablecoins drive on, the network that processes and confirms those stablecoin transfers fast and cheap, not the actual cargo being transported. That's still genuinely significant because it means Visa, one of the most conservative, risk-averse payment companies on the planet, looked at Stellar's infrastructure and decided it was trustworthy enough to plug real settlement volume into. But it's a different claim than Visa bought XLM, and I think being precise about that difference actually makes the case stronger, not weaker, because it shows you exactly why institutions keep choosing this network, the infrastructure itself, not just token speculation. And I think it's worth understanding why Visa specifically chose to add Stellar rather than just sticking with the chains it already supported. Visa CEO Ryan McInerney has talked publicly about 3 things of payments of infrastructure needs to deliver: trust, ease of use, and scale. Stellar's specific design, built originally back in 2014 around the idea of fast, low-cost cross-border transfers, lines up pretty directly with that checklist. And analysts covering the announcement framed Visa's move less as a speculative bet and more as a long-term validation of the underlying technology, the kind of partnership that tends to carry more staying power than a typical hype-driven crypto headline, precisely because Visa doesn't have any incentive to attach its brand to infrastructure. It doesn't genuinely trust to work at scale for years without embarrassing failures. And the list keeps going. MasterCard and Stripe's stablecoin division have also been named in reporting on Stellar's institutional partnerships from around the same period last year, alongside the DTCC and Salesforce integrations that reinforce the network's broader institutional credibility Analysts covering this wave of partnerships specifically called out use cases like payroll processing, cross-border payments, and Soroban-based smart contracts, Soroban being Stellar's smart contract platform. As the kind of mainstream adoption drivers these integrations could unlock over time. Visa and MasterCard alone process billions of transactions annually between them. So even a small percentage of that volume eventually crowding through Stellar-based settlement would represent a meaningful jump in real network usage compared to where things stood just a couple years ago. Speaking of DTCC, the Depository Trust and Clearing Corporation, the clearinghouse behind nearly every stock and bond trade in the United States, overseeing something like $114 trillion in assets, announced they're connecting their own tokenized securities platform to Stellar, targeting the first half of 2027, covering things like Russell 1000 stocks, major index ETFs, and treasuries operating under an actual SEC no-action letter. Franklin Templeton's been running a tokenized money market fund called Benji on Stellar for years now, to one of 8 blockchain platforms supporting that fund family. So that's the actual roster. PayPal, Ondo Finance, Visa, MasterCard, Stripe, Stablecoin, ARM, DTCC, and Franklin Templeton. That's not a meme coin community vibe. That's a genuinely unusual concentration of serious, regulated, billion-dollar-plus institutions all choosing the same piece of blockchain infrastructure for real live or near-term products. Now, what are they waiting for? Since that's the actual question in the hook. I think the honest answer is they're not really waiting in the sense of sitting on their hands hoping for a price pump. And I'd be doing you a disservice if I framed it that way. What it actually is a series of dated, trackable milestones, Meridian, in Q3 this year. The Foundation's big annual ecosystem event, explicitly described as a large-scale event aimed at building relationships with banks, asset managers, and global remittance partners. That's a real dated event, not a hypothetical. The DTCC integration is targeting the first half of 2027, specifically not soon, not eventually, an actual targeted window. There's also a quantum preparedness rollout planned for 2026 into 2027, starting with enterprise wallets, preparing the network's cryptography for a future where quantum computing could threaten older encryption standards, which is the kind of unglamorous, forward-looking infrastructure work that serious institutions actually care about, even though it never makes for an exciting headline. And just this June, the network began the validator vote process to activate something called Protocol 27, which includes a feature called delegated authentication, basically allowing transaction approval to be assigned to other addresses, which is specifically aimed at making the network more useful for complex, secure DeFi applications. That kind of upgrade matters more than it sounds like on the surface, because it's exactly the type of feature institutional partners ask for before they're willing to build more complex financial products on top of a network. The ability to delegate signing authority across multiple parties or systems, rather than every transaction needing a single, simple signature the way a basic payment might. It's infrastructure maturity, not a flashy feature, but it's the kind of thing that quietly determines whether the next wave of institutional products beyond just stablecoin settlement becomes possible on this network at all. So if you're asking how much time do you have left, I think the honest, responsible answer is this isn't a ticking countdown to a guaranteed price explosion on a specific date. And I'd be doing you a disservice if I framed it that way. What it actually is a series of dated, trackable milestones, Meridian in Q3 this year. The DTCC integration targeting H1 2027, The quantum rollout spanning into 2027 that you can actually watch unfold milestone by milestone instead of just hoping something dramatic happens on. No schedule at all. The time you have left isn't a countdown to an explosion. It's more like the window where this institutional case is still being built out, rather than already fully priced in and finished. And I want to be honest about the other side of this too, because I don't think a fair video does only the bull case. Even with all these partnerships confirmed and real, none of them guarantee a specifically priced outcome for XLM. Visa settling stablecoins on Stellar's rails increases real network usage, real transaction fees, real validation of the infrastructure. But the actual token XLM captures that value indirectly through fee burn and through the broader credibility that attracts the next institution to make the same choice, not through some direct mechanical dollar-for-dollar relationship where institutional volume equals token price. Stellar's had real major catalysts before. The MoneyGram partnership, the United Nations World Food Program using it for digital dollar distribution, years of genuine enterprise activity, and the price has historically struggled to hold on to excitement in the short term, even when the fundamentals were genuinely strengthening underneath. So the pattern historically has been a short pop on the headline followed by a long grinding stretch, where the real building keeps happening quietly while the price just sits there. I think it's also worth being honest about the difference between a partnership being announced and a partnership being fully operational at meaningful scale. PayPal's PYUSD being live on Stellar is real. It's launched. You can verify the transactions on chain right now. But PayFi, the real-time business lending product PayPal's building on top of it, is still in development, not yet generating the kind of transaction volume that would show up as a clear, undeniable driver of network fees. The DTCC integration has a target window the first half of 2027, but target windows in institutional finance slip more often than they hit exactly on schedule. That's just the normal pace of how large regulated institutions roll out new infrastructures. And layers of internal compliance review, risk committees, technical integration testing, all of which takes longer in practice than it sounds like in a press release. None of that means the thesis is wrong. It just means the gap between announced and fully scaled and moving real institutional money every single day is usually measured in years, not months. And managing your own expectations around that gap is part of being a genuinely informed holder instead of someone just riding headline excitement. There's also the concentration risk side of this. That's worth tying back in, since that's literally how this video opened. If that 41% foundation wallet ever started moving in a way that broke from its historical mission-aligned pattern, that would be a real signal worth paying close attention to, specifically because it would represent a break from established behavior, not because the wallet existing is inherently dangerous on its own. XLM's daily trading volume tends to run somewhere in the $100 million range on an active day, which is genuinely thin relative to the billions of dollars that wallet represents at current prices. If even a modest slice of it ever hit the open market in a short window, outside the foundation's normal grant and partnership funding pattern, that could represent multiple days' worth of XLM's entire normal trading volume, landing all at once, which is exactly the kind of concentrated pressure that moves in price hard in either direction. So the same concentration that's funding all these partnerships is also a real structural risk if the pattern ever changed. And a genuinely informed holder tracks both sides of that coin, not just the exciting partnership half of the story. And I think the genuinely smart way to hold both of these truths at once, the exciting partnership roster and the concentration risk sitting underneath it, is to treat the Foundation's wallet less like a ticking time bomb and more like a budget you can actually audit. The Foundation publishes information about its grant programs and ecosystem spending. A holder who actually wants to track this properly can check periodically whether new spending lines up with the kind of partnership and infrastructure work we just walked through versus whether something looks genuinely out of pattern. That's a very different, much more useful relationship with the data than just absorbing the scary top-line percentage and either panicking about it or ignoring it completely, which is honestly what most people do with concentration numbers like this in either direction. So, pulling this all together, here's the actual honest version of what's happening instead of the dressed up version. The Billionaires betting heavy framing is more accurately described as billion-dollar regulated companies: PayPal, Visa, MasterCard, Stripe, DTCC. Franklin Templeton choosing Stellar's infrastructure for real, live, or near-term products. While the Stellar Development Foundation's own treasury, the biggest CFO single wallet on the rich list, funds the ecosystem work that helped make those partnerships possible in the first place. That's not a hidden conspiracy or some secret elite accumulation play. It's a publicly documented, increasingly long track record of serious institutional adoption with a published multi-year roadmap of further milestones still ahead. None of that guarantees a specific price target on a specific date, and treating it that way would be irresponsible. What it does tell you, honestly, is that the structural case for this network has gotten meaningfully stronger and more diversified over the past year. Specifically anchored in real partnerships, you can actually verify yourself, not just hype that's never confirmed. And I think that verification piece is actually the most important takeaway from this entire video, more than any single partnership or any single percentage. Every claim I just walked through, PayPal's announcement, Visa's settlement platform update, the DTCC no action letter, Franklin Templeton's Benji fund, the rich list breakdown itself, all of it is publicly checkable on-chain or through official company statements by anyone willing to spend 20 minutes looking around. That's a fundamentally different category of information than a vague rumor or a chart someone posted with no sourcing attached. The video's titled "Billionaires Are Secretly Accumulating Without Ever Naming a Single Verifiable Partnership or Showing You a Single Real Wallet Address" are the ones actually asking you to trust them blindly. A video that hands you the actual names, the actual dates, and the actual caveats is asking something much more reasonable. Just that you go check it yourself and draw your own conclusion about what it's actually worth to you. If walking through the actual receipts behind these partnerships, instead of just repeating billionaires are buying without ever actually checking who's behind that top wallet or what these partnerships actually involve, go ahead and hit like on this one. It genuinely helps put this kind of verified breakdown in front of more people instead of vague hype with no actual sourcing behind it. Subscribe if you want more of this. The actual confirmed partnerships and the actual dated timelines tracked properly instead of just price speculation dressed up as research. Drop a comment and tell me, out of PayPal, Visa, MasterCard, Stripe, DTCC, and Franklin Templeton, which one of these partnerships do you think actually matters most for XLM's long-term case? And which one do you think is more headline than substance? I want to see real reasoning, not just excitement. And if you know somebody who's been repeating billionaires are accumulating XLM without ever actually checking who and behind that top wallet or what these partnerships actually involve, send them this video so they're working from the real picture instead of the thumbnail version of it. So have a great day. If you enjoyed this video, don't forget to like, subscribe to the channel, and share it with others. It really helps the channel grow. This is XRP Hulbert signing off. Goodbye, and I'll see you in the next one.